folks. Welcome to Thursday Night Stock Charts Live. This is where we review the closing price action of the major averages, or I should say, the potential closing price action of the major averages on this glorious Thursday night. We're going to talk about a little bit about Jackson Hole, not much. A couple of charts about the economic picture. The Federal Reserve's balance sheet, did it increase or decrease this week? And we're going to talk primarily today about our small account. And I started discussing this, I think it was on Sunday night, about how I was going to be very transparent, opening up a new account. I deposited, this is the account, I deposited $20,000 on August the 11th. It took a year and a day for them to get me margin and options authority, but ultimately they did give it to me. It's still showing in review on options. So Schwab, you got to get your act together. So they did give it to me as of yesterday. So today was our first trade using options. We did an equity trade last week of Hawaiian Electric. We booked some profits there. So far, we're in the middle of our second trade, and we are up 3.78% since August the 11th. So a good session. I'm going to walk you through this trade today. I'm going to show you how it looks in our trading platform. I'm going to show you the whys behind the trade and how we plan on managing this trade and this account moving forward. If you want to be invited to our live streams, private live streams, go to the 30-Minute Chart Club link below, enter your email address. I'm probably going to go live, private live stream tomorrow. I'm not quite sure what time yet, but if you're available, please join in. I keep it private so that we don't get spam. We stay on point, and we try to keep it very, very brief, short, sweet, and concise. So let's get to it. So this is the account. It's for real. And we are up since the 11th, $755.44 on a basis of $20,000, 3.78%. So let's talk about the trade. So we traded NVDA. And let me walk you through my observations last night. I did market wrap with members, and here's what I had to say about NVIDIA's earnings and how it led into today's trade. So we do our homework the night before, and we prep for the next morning. You don't want to do your analysis in the middle of the day. You get too emotional. You'll get too impulsive. Always do it after hours or before the open, so that way you don't talk yourself into a trade. Here's what I had to say. This is immediately after Netflix had reported earnings. Okay, folks, welcome to Market Wrap for the 23rd. All right, so NVIDIA's earnings are out. They were incredible. So let's talk about the price action. The anticipated market maker move on NVIDIA had dropped down and closed out at about $44 per share. We were as high at one point during the week at around 48, I believe. And the way I interpret this is that, last quarter's results, let's bring up the chart from back in the last quarter. So here was last quarter. Last quarter was not a stellar quarter, yet the shares just took off like a rocket ship. Now, fast forward to a earnings beat that came in. The prior earnings was $1.09 a share. This time around, $2.70 a share. I mean, astounding numbers. Share buyback and whatnot. The second I saw that, though, immediately I said, worry about the forward-looking guidance out of NVIDIA, or whether or not this stock is pricey. Because whenever you see a stock come out with a share buyback, normally they're ready to deliver some bad news as well. We didn't get it on EPS and sales. I mean, it's astounding numbers. It's not a joke. I'm being sincere, not being a wise guy. Astounding numbers. Yet the share price is within the anticipated market maker move. This time last quarter, on earnings that were not as good. In fact, they declined. The shares took off like a rocket ship. Now, tomorrow morning, you know what? Maybe we're going to go up to $600 a share for all I know. What do I know? All I'm saying is that the price action looks a little bit wonky to me. Now, their conference calls, it may be over by now. Their conference call began at 4 p.m. Central Standard Time. So that's 5 p.m. Eastern Standard Time. And if it's still going, they're on the back half of it. So, you know, good numbers here. And how's the market reacting? As you might expect. NASDAQ futures grinding up higher. VIX grinding lower. So were I long of NVIDIA stock, I would be somewhat disappointed in the price action. And I know it popped up higher. It's not lost on me. But what I'm going by is the anticipated market maker move. We're within that range. And relative to last quarter, when EPS was not great, nowhere near like what we saw today, yet the price action is a little bit men's and men's. We'll see what happens tomorrow. All right, let's get to it. Okay, guys, before we get to the chart, I just put an order in, and I got filled at 1847 on the SQQQ on this pullback. I'm speculating here that that this is not going to hold up. Maybe for tomorrow it'll hold up this rally, but I'm not getting a great feeling here. So, not a big addition to the position. Okay, so that's a long-winded way of saying that in my gut, while the talking heads on CNBC talking about how this is the AI leadership name is going sky high, the price action was telling me different. So when I woke up this morning and I saw, as a matter of fact, last night, it dropped back down briefly, back down below $500 a share. Then it popped back up right before the aftermarket trading closed, 8 p.m. Eastern Standard Time. And then I woke up this morning, it was about $508 per share. And then I knew that there was a problem in Dodge. The equity futures market, NASDAQ, the NQ, was all moving up higher. I didn't believe it was going to last. So the trade was that I did not believe that NVIDIA was going to be able to hold gains. I believed it was going to sell off as I did the rest of the market. That's why we added to shorts last night, not this morning, but last night. And with regard to NVIDIA and the small account trade, here's the trade that I did, because NVIDIA this morning gapped up. Remember, the after hours high last night was $520. This morning it went up as high as $502.66. So it gapped up, failed to hold. We got a little rally back here. And I said, you know what? We're shorting it. And so I brought up our trading platform. Here it is. Here's the account. Here's the trade, NVIDIA. And you can see that we are up 48.39% on the trade. So what I did was, and here's the actual trade. I did a print screen of it just so we could chat about it later on. And I said, you know what? We're gonna short NVIDIA, but I want to be so conservative that it makes me sick. And I said, what we're going to do here is I'm going to go out into October and I'm going to sell I call it a 10 delta, which is just below a 10 delta call option, which when you sell the option, because we're option sellers here primarily, you are betting against the stock. I had an option buyer, a call option buyer, betting that the stock was going to be at or above 650 by October the 20th of 2023. But I also put an insurance policy on. I didn't have to, but because this is a small account and I have traders out there that are going to be following me that can't trade naked options, I said, you know what? I'm going to build this account up to $25,000 and then I'll go naked on the positions so that I can help out the smaller trader out there who doesn't have a tier 3 options account where you can't trade naked options. But we'll get you there. So we're on a road to that $25,000 price target. So this is where we're at. And to put things into perspective, This is around a 90% probability trade of profit the second I put it on. Now, as we sit here this evening and we take a look at NVIDIA and how it sold off today, this is why we have that 48% profit at current. But the other reason because of the weak price action, the other thing is that we had IV contraction. So this morning when we put the trade on, the IV percentile was at around 30%. Now it's at about 18. So the value of the options contracted simply because nobody's interested in those calls anymore. So it's a really good trade for us. And even if the stock rallies back tomorrow, there's a 95% probability that that trade is going to be profitable. And here is the profitability at current. So we have the 650 call options right now. Technically, we have about a 97% probability of profit on that trade. So that is NVIDIA. If you're interested in the live stream tomorrow, because I do not plan on staying in this trade much longer, I put in a 50% profit stop today. So basically, if we had 50% profit, I was going to get stopped out. As a matter of fact, I'm going to enter that now because I want to exit the trade tomorrow and then go shopping elsewhere, because this is tying up a lot of capital. And I don't want to have a miss of opportunity cost out there. So all we stand to make right now is between now and October the 20th, if I hold this, is maximum $278. That's not enough. We want to go elsewhere and start looking for bigger fish to fry. So NVIDIA, good trade, but we're ready to book profits here. And I'll put it in for, hopefully they gap it down tomorrow morning. We'll close it out for 60 cents. And we don't worry about it. The minute that gets filled, we look for other opportunities. And that's what we're going to be talking about tomorrow on 30-Minute Chart Club. So if you're not on that list, it's a private list. Just sign up. It's free. And members, of course, you get invited as well. Okay. Let's go to comments. I didn't say hello to everybody. Seymour. It's big game, but not a profit yet. But thank you very much. I know what you mean. Thank you very much. I never count our chickens before they're hatched. No, I don't think so. I think the dollar's going up higher. Forget that brick stuff right now. A lot of people are talking about that. You got to remember that these people that are in the brick nations, these are despots. You know, I don't care if it's South Africa, Brazil, China, Russia. These are all despots. So are you going to trust your capital with them? I don't think so. Except for India. India's a different story. Sean, hello. Bob and crew, good evening. And I look forward to hearing Bob's side. Thank you, sir. He has brought money. He has brought money my way. Yeah, we closed out. What did we close out today? We closed out Hawaiian Electric. That was a naked put trade. We made about 25% there. Boyle, that's what Franklin's referencing. So yeah, today was a really, really good day. Our shorts worked. We were building shorts yesterday before NVIDIA's earnings because we anticipated this sell-off, and we got it. Thank you, Seymour. Appreciate that. Dan, glorious Thursday night. Absolutely. TF Hatter, welcome. HE taking the poo on the news, Hawaiian Electric. So they're good. They're down after hours. Oh, yeah. Thank God we got out of that. I still have some common stock. So this is why we don't wait for the last penny, guys. We made 25% on a very speculative stock on our options, a large options account. We made more money. I forget what it was, about 3.5% on the small account. So you don't want to stay in these speculative names. Book your money, get out. Let's just say book your profits and get out. I bought a little bit and pre-more. Oh, good for you. Good for you, TF. I think Talon did that today. Where's Talon been today? He made a lot of money today. I haven't heard from him all day long. Hi, Bob. Can you please look at B? Yeah, sure. Okay. We'll get to that. All right. So if there are no questions, we're going to move on. And don't forget, 30-minute chart club, link below, private live stream. And I'm going to be putting together a course on options trading. And the feedback you give me and questions you give me will be incorporated into that course. So I'll be doing surveys and whatnot. And Franklin, Talon is out spending his money. Good man, Talon. He's probably down at the beach in his camper, cooking no less. Okay, so if you have questions, please let me know. We have the small account trades. This is our first trade that we put on today. That's posted in the Slack forum. Here's where we post our options trades in the big account. I also posted the small account in there. Here's where we go in and we just post good stuff about the market and BS a lot and have a great time. So if you're not currently a member, sign up, 14-day free trial offer, get the alerts, small account, large account, you get it all. And plus, when I put the course together, those that are existing members get it free. Those who are not existing members, it's going to be an upcharge. So you got to be an existing member. Go for the yearly and get the course for free. I don't know what I'm going to charge for it. It depends upon how much work I put into it. Okay, and it's going to be a lot of work. Let's get to, are we cheap? Are we done going down? I don't think so. P multiple on the S&P 500 remains above 30, so still very expensive. And here's a look at the semiconductor sector. These are the leadership names today: AMD, On Semiconductor, LRCX, I don't know them, KLN Tencor, Microchip Technologies, and AMAT. AMAT's important because A, they're coming out with earnings soon, and B, AMAT is the producer of the gear that all of these companies use. So if AMAT's going down, that's a major problem. So the semiconductor space, along with NVDA, which is barely held on by a thread today, is under a tremendous amount of pressure. Why? Because all of these candlesticks are bearish engulfings. All of them, without exception. What's a bearish engulfing? You're not familiar with the terminology? Link below, 5-part video tutorial on my top 5 favorite candlestick patterns. It's free. So, semis under a lot of pressure. Will Jay Powell save the day tomorrow with his presser out of Jackson Hole? I really don't care, to be honest with you. Does it matter to the market? Yeah. Will there be a knee-jerk reaction? Sure. But let's face it. If he is dovish, they're going to say, well, what's wrong with the economy? If he's hawkish, they're going to say, oh my God, there go the banks. He can't win. So if he comes out dovish, might there be a knee-jerk reaction to the upside? I'm expecting it. And I'll go to the reason why in a moment when we talk about our positions in Microsoft and Meta. I'm going to share with you where I believe the market is going in the very, very near term. The Federal Reserve's balance sheet continues to drop. It dropped mildly this past week. This is as of yesterday, published today. And this is really all that matters, is that there he is. The man, the mission. There was a silence out there. There he is. Good day today, right, Talon? So, I stand corrected. We always want to be on point, even though I'm embarrassed. I knew it was a late quarterly report, but RB corrected me. AMAT came out last week. I stand corrected. So much for being a YouTube guru. Bad YouTube guru. Okay, thank you for that, RB. So this is really all that matters. All that matters is this: what are market participants expecting for September and November? Has much changed? Well, yeah, honestly, the odds of a Fed rate hike have dropped by roughly 10 basis points over the past week. Excuse me, scratch that. The odds of a Federal Reserve no rate hike have dropped, meaning that the probability of an increase has risen, but by and large, the Odds of a Fed rate hike in September are negligible, probably nil. Now, in November, that's more of a 50-50 game right now. And these odds are getting ever more biased towards a Fed rate hike. This is what we're going to be watching, not the September meeting, but more so the November meeting. Will it be an every other meeting rate hike? If they do that, I think that equities go lower. I think that's too much for the equity markets to handle. Why? We're falling apart. Take a look at growth in real home prices, real disposable incomes by population. Here's the population. Here are home prices, and incomes are down. Home prices rocketing. And when you take a look at the percentage of new home construction as a percentage of home sales, the high was in Q1 2022 at 34.5%. Folks, we are still at above 31%. That's relative to at the 2000 peak 14.4. Let's call it at the great financial crisis peak at around 17, 18. Now it's over a third. Brand new homes of the new home sales. Why is that? Well, you could argue that it is because the people don't want to leave their homes because they have very, very low interest rates. Why move? Why move? Stay in that house and keep that very, very low rate. That's a very good argument. I think that's the vast majority of the reason as to why you're seeing this occur. But the other reason is this. Who's been buying? What conglomerates out there? What financial demons have been out there buying up residential properties? And I'm not just talking about one or two houses. I'm talking about entire developments. BlackRock, Goldman Sachs, usual suspects. They're buying up these properties so they can rent them out at ridiculous prices and plus get what? Guess what? Capital appreciation on the home value. So they're gouging the renter because they're creating a limited pool of the supply for rental units, and all the while those property values are skyrocketing. And I'm just noticing this. So this is Canada and this is the United States. There's actually two separate charts. They have this stupid link here from Norton. I don't know why that's there. I got to figure out how to get rid of that. So this is an American thing. It's also a Canadian issue. And this, I bet you, is mostly Vancouver. The Chinese completely bid up Vancouver. Now, why else do we think that the Federal Reserve is going to have to become more tame here soon? The reason is quite simple. Credit card delinquencies are at levels not seen since 1992. I had just gotten into trading equities a year or two before that. So I was very new. I started trading during a recession. And I remember this. This was a very, very bad time. I bought my first home on foreclosure it was just after the S&L crisis in 1994. So it was immediately after that crisis where nobody wanted these homes. I went in, I started buying. So we're there again. So here's the upshot. After this, because when I got into trading in the 1990s, I had no idea how bad the S&L crisis was. I had zero context of how severe it was, but it was very, very severe. And here we are again. So out of the ashes rises the phoenix. I'm very, very optimistic moving forward about opportunities out there. But the key, me being now going into being an elder statesman of equity trading and options trading, I want to take you back to my beginning. And you don't know what you don't know at the beginning of your trading career, which is fine. You learn as you go along. And while you're looking at very, very hard times in the coming months, they're going to be difficult. There will be a bright light at the end of the tunnel. The key is this, and you need to ask yourself this question. Am I liquid? Am I liquid? What does that mean? Well, if you're in this market right now and you're staring at the abyss, yield curve, quarterly view, breaking out, negative for stocks, 10-year yield, yearly breakout, new higher highs on the year this past week. Ask yourself this question as I'm going to skip around here because I want to drive home a point. I want everybody to do very, very well. You're good enough to come here twice a week. Some of you folks are my members. I want to see everybody prosper. You're good enough to spend time with me and make this a very enjoyable time for me. So I want to make sure that you're here and still engaged 2, 3, 10 years from now. But the key is that you need to ask yourself the question as the triple Qs are flashing a probable double top here on a monthly time frame. As the triple Qs today flashed a bearish engulfing bar and broke down below critical support, as Netflix failed breakout from yesterday, as Microsoft still up on the week, but big topping tails. And you might as well do this because we're short of it. Take your crayon out and say, okay, here's my trend. And that trend is not up, it is down. Microsoft, Facebook, Meta, daily chart. This is a bear flag setup. We're short. We're short of this. Using a ratio strangle, meaning we sold more calls, twice as many calls than we did puts. So we're short, and we're getting ready to book profits on the first tranche. Actually, it could be the second tranche, and roll them down. So as all of this is coming together, and you're seeing that we have problems in this market, major problems in this economy. We have an idiot, a moron, and corruption in DC. We have Republicans that I saw last night. I watched it this morning. I wouldn't give Fox 10 minutes of my time last night. I just went to bed. I wanted to be up early studying my charts because I'll give myself my own news. I saw morons, Chris Christie, the Arkansas governor, whatever his name is, I forget his name, doesn't matter. Some lunatic on there is a governor out of North Dakota. I never even heard it before, except for, I always get this guy's name wrong, Varrick Ramaswamy. I was very disappointed with who I happen to like a lot, DeSantis. I like him a lot. I just think he's got bad people advising him. These guys are not ready for prime time. Not that I'm a big Trump fan, but he's better than what's on that stage right now. And we have big problems. And if anybody that's serious is going to come in and try to fix the problems in the short term, it's like chemotherapy. The problems are only going to get worse. They have to. To get to the cure, we need chemotherapy. And chemotherapy brings you close to death to get you healed. So we're facing a very difficult time. And the path of least resistance for the politicians right now is to print money. But in reality, it's just making the problem exponentially worse. Because at some point in time, the bond market is going to call BS on the United States, and they're going to say, we want more yield. 10-year yield. Are you seeing it? We have a multi-year breakout, a decades-long breakout on the 10-year yield. The bond market is saying, we want more yield. You're too risky. And as the BRIC nations, if they do get their act together and have a gold back or a commodity basket backed currency, Those dollars that are overseas are coming home. They're going to come home and they're going to flood the US economy and nobody's going to want them. And inflation, if you think it's bad now, you ain't seen nothing yet. So liquidity, if you're on margin, revisit your strategy. Get off of margin if you are long. Think about it. Consultative financial advisor, I have to say that. Think about getting liquid. Believe me, even though we had a great day today, you know what I kept looking at? My net liquidity. Am I too extended? Am I too leveraged? I worry about it every single day. That's that. Let's go to some comments. Talon, good afternoon, everybody. Let's smash the like button for the market. Smash your big butt. Thank you very, very much. Thank you. It's been a very, very good week. But you nailed it too. You shorted it too on your own. You didn't need me. Dow Jones is developing depth cross. Yes. Mr. Pete, welcome. NVDA stock buyback program at 25 billion. Looks like there's only 16 billion on the balance sheet. All right. So here's the deal. All right. So when I heard that last night, it's rare. It's rare for a company to come out and beat that big and then put a bazooka at the end of that earnings report. And what's the bazooka? The bazooka was the share buyback program. Now, it's a misleading announcement. And that's why I say a lot of companies save it as, you know what, we have a bad earnings report or guidance is not going to be that great. We don't want the street to take us to the woodshed. So we'll announce disappointing forward-looking guidance, or we'll announce our poor sales. But yet, we're going to have a share buyback program, and hopefully that stems some of the bleeding. So when I heard that they were going to do a share buyback program last night, and then their earnings and sales were astounding, I was waiting for, you saw how late I did that video, I was waiting for their earnings call to get underway. And I was expecting a negative pullback, which we got, but I don't think it was simply because of the earnings call. I think that all of this was priced in. It was already priced in. And even the share buyback wasn't enough to keep the shares up. Sellers were going to sell. To sell on the news, people were out there. We were one of them. We sold the news. We shorted yesterday during the regular scheduled hours. We shorted the Qs using puts. After hours last night, we added to the short SQQQ. This morning, we shorted NVIDIA. We bet that this was all going to be wrong, and we were 100% accurate. Listening to the slick back Wall Street thugs, oh no, the stock market can only go up. BS. There will be great buying opportunities out there, folks. They're going to be great opportunities, but in the short run, I think the path of least resistance is to the downside, unfortunately. Bob, can you go over AMD? Yes, I can. Jody, we miss you. We're thinking about you. We have several. I think that we are becoming a more popular live stream and even membership now to females. Usually we got 0 to no females. We have, not that Jody's a member, but she comes to the live streams frequently. We have Kelly who comes to the live streams. We have Wendy now. We have several other ladies, Gay, remember, a lot of them now. It's great. It's really wonderful. So it's great to see that we're expanding out besides these mad lad maniac men I have on here, like Town and Franklin and Gay. I'm not Gay. Donnie. So excited to be here on time. Good to have you. Good to have you. All right, so let's get to it. So bond yields are actually down on the week, but yearly the trend is up. We're breaking out. TLT, Treasury bond, 20-year bond ETF, weekly chart, trying to break out. At current, it's being rejected at resistance. Tip market, Treasury inflation protected securities, up on the week, but fading off the highs. The US dollar. Okay, so let's talk about this for a moment. We put on our first trade, a long bias trade on the gold mining stocks earlier in the week. We're up on the trade right now. We got long of Nugget, but we sold puts. We also sold a deep out of the money call against it, but by and large, it's a ratio strangle bias long. And it took off. We're profitable on that trade right now. But the dollar is screaming up higher. And I don't think that this can last. You cannot have the gold mining stocks, gold, silver, it's platinum, palladium. You cannot have them all rallying at the same time for any length of time. Short periods of time, all right, you have your anomalies, but for long periods of time, no. Unless, of course, you have a geopolitical event, which thank God we do not have that right now. So if the dollar continues up higher here, I'm not going to be leaning in further on NUGT or gold or anything like that. But on a pullback in the US dollar and a nice setup on gold, silver, etc., we're going to be loading up on those names. But the dollar must break. But right now, the path of least resistance remains higher on the dollar. And to validate the strength of the dollar, all we need to do is take a look at the euro. Euro is breaking down. One trading day left to go. A lot can happen here in the week. This is a weekly chart. Taking a look at the yen. Yen is breaking down. So when I take a look at the dollar and the currencies it trades against, the primary currencies, euro, yen, I got to say, you got to avoid gold and the mining stocks. You have to. And when I say gold, I mean silver, platinum, palladium as well. Just lump it all in there because they trade inversely of the dollar. So how are we looking in terms of volatility this week? Here's what's different from prior weeks. One trading day left to go. So weekly chart, VIX. Now, we're down on, is this updated? Let me make sure this is updated. Yeah, we're still down on the week, but on the day, outside reversal bar. Very, very bullish. And the same chart is true on our SQQQ position. Same exact chart. So it looks as though we are putting in higher lows. We'll go back to the VIX. Higher lows. And now we're looking for higher highs. And we can get that higher high as soon as tomorrow. But all probability next week, because Fridays usually is a short covering day. So you're probably going to see, after a down day like today, some shorts covering into the weekend. The Dow transports. Weekly view. They broke down. So the transports are not doing well. They were doing it great. They were a leadership group. They're now really pulling back and pulling back hard. And when you see this type of a setup here, you got to take your crayon out, because when I look at a chart like this, I am thinking short all day long. But for me to short this, I need to see a breach of this lower band of support in blue. Not before. You do it on the breach. And a close below that breach. Dow Jones Industrial Average. Somebody just mentioned, Pete mentioned the death cross on Dow Jones. We'll go to the daily chart in a moment. New weekly lower low at current. We're trading down below the 20-period moving average, weekly time frame, daily view. On a daily view, outside reversal bar, bearish key reversal. Call it what you want. Call it cupcakes. This wants to go lower. Your death cross it's forming, but we're not close to it yet. 50-day is flattening out. 200-day is down here. For your death cross to happen, your 50-day to cross down below the 200-day moving average. It's going to take several more days for that to happen, assuming that the stock or the index goes lower. Longer for it to occur if shares stabilize or give us a bias to the upside. Now, we are seeing a potential double bottom setup on momentum, warning flag on the track. However, we close out the week like we look right now, or worse, in all probability, we are going lower. I suspect tomorrow they're going to gap us up and into resistance in an effort to try to recapture 34,250. My guess is, unless, of course, Powell just spikes the ball and says, you know what, we're done. It's rah-rah time again. We're going to start at the printing presses. We're going to see a failed rally tomorrow. So just like today, just like I always say, do not go chasing the bright green futures in the morning because it'll hurt by the end of the day. Let the suckers who are watching CNBC go chase the market. We do not do that. S&P 500 weekly chart, still up on the week, holding support, not broken, but you can see money flow leaving. Daily view. Again, we broke out yesterday, outside reversal bar, bearish key reversal, call it what you will. It's ugly. 5-part video tutorial below, top 5 favorite candlestick patterns. This is one of them. We already went over the Qs. I'm going to skip that. The banks, big trouble here on the banks. Banks, new weekly lower low. This bear flag setup or this counter trend rally is over. I want to check out the KRE. That's the regional bank index. So we have the money center banks down spot 44%. KRE regional banks down 1.81%. Here's your death cross on a weekly time frame. Technology, bearish reversal bar, but still up on the week. Semis, still up on the week, but horrific price action today. We already went over that, but let's take a look at it again. This destroys confidence. Days like today, where you have NVDA, all the rah-rah boys are on TV this morning. NVDA this, oh, AI that. Got to buy stocks, got to buy stocks. Look at where you'd be if you were buying the SMH today or in the morning, in the pre-market, last night, buying NVIDIA up at 320 per share, or 520 per share. LABU, we own this. Not a huge position, but we own it. Not looking good, to be honest with you. So I would not go adding more. We will eventually. We'll look for a higher low and a higher high. We'll add then, assuming that the markets hold up. Staples breaking down, folks. Consumer discretionary names still holding support. I had hoped for a counter trend rally here where we could lean into the short side. We didn't get it. Emerging markets, they're up on the week. You still got to avoid these. I think that this is going to fail if the dollar remains strong. And I own this. I'm not letting go, but I'm going to buy a lot more at lower prices once the dollar breaks. Energy. Gay had asked me about energy earlier on a call, and I forgot to go over it. So energy is breaking down on the week. We are down at current 2.32%. Daily view. They closed it lower. Now we have a position on. We have about a 70% profit on this trade. We shorted this back here using a call spread and closed up today. They're not taking my offer. Every time I put it in at the midpoint, they raise the bid on me. And so I have time on my side. I just can let these options expire worthless. But I prefer to book my profits because there's not much meat on the bone and raise liquidity. It always goes back to how much my liquidity is. I want to raise more liquidity. Oil, Earl, as we say in Brooklyn. Down on the week, 1.61%. Daily view. Bullish key reversal bar today. This may go up higher. Gasoline, weekly view. We may see a bottom here. We found support at the 50-period moving average. If this starts moving up higher, equities are going to have a problem. Why? Inflation. Boyle, we booked our profits here today. They must have had a draw on inventories, which was reported this morning every Thursday, 10 a.m. Eastern Standard Time. and Boyle or nat gas spiked up higher. That gave us our opportunity to exit stage right on our options trade there, and we raised more liquidity. Gold up on the week, looking pretty good. I'm suspect. Dollar strong. If the dollar breaks, I'll be more confident in this move. If the dollar remains strong, gold's not going anywhere anytime soon. Daily view, wrong chart. Yeah, they closed it down today. I wouldn't go chasing this. Watch the dollar. Mining stocks, we already went over, kind of. A good day today on GDX. Oh, this is weekly chart GDXJ. Really good price action. Let's go to a daily chart. What did it do today? Down session, no great shock. Let's update this because I want to be a buyer of more GDXJ when the dollar breaks. It's holding the breakout. We'll see how it holds up by the end of business tomorrow. All right, let's do some chart requests and we will call it a night. Yeah, skew is another good way of measuring fear. I forget which is which. It's like if skew is deep out of the money options or VIX is near or at the money options. I get them confused, but they both use options to determine fear in the marketplace. So yeah, the skew index is coming in as well. As a matter of fact, remember it was only 2 weeks ago. The Bulls Bears sentiment index was really, really strong. It's collapsed. People are waking up. Okay, let me refresh the members area, make sure I don't have any more requests. I have several to go over. Okay, we're good. All right, first up for our lovely member, Wendy, APLD. Weekly view. Weekly chart, you want to avoid this. We are breaking down. We were higher. We were rejected at this volume shelf. Daily view. Outside reversal bar. This is going lower. So avoid this. Please avoid this. MRVL. Has Marvell reported yet? I think they're due. Maybe it could be even tonight. I think they were reporting this week. They reported. Oh my God. Oh my God. Yeah, they reported today. Holy cow. What was the anticipated market maker move? Market makers were expecting a $4.62 move. We closed at 57.29. We're now at 54.34. So we're within the range of the market maker move. But man, bloodbath here. This is not going to bode well for the futures. Actually, the futures are up. VIX flat. What's NVDA doing after hours on this news? It's down slightly, flat. All right, so you want to avoid Marvell right now. You don't want to go buying a stock immediately after a disappointing earnings report. Let it settle out. Usually it takes a quarter, minimum a quarter for these stocks to recover. So there's no great rush here. If the implied volatility is still very high tomorrow, I may close out one of my lower volatility trades and move into that one. Maybe I'll close out NVIDIA and move into Marvell. It's a lower dollar price stock. So I could do more with the capital I have in that small account. So this may be one that we're talking about tomorrow. I have several stocks that I want to talk about. SEDG is one that's extreme oversold, and another couple of ones out there. So join us tomorrow, 30-minute chart club. We'll talk about the small account. If you're just joining in later on, go to the beginning of the video. We talk about our small account and our NVIDIA trade and how that account is doing. All right. not write one down properly. T. I did write it down properly. T. All right, AT&T, weekly view. I love the premiums here. If they go back to cutting yields, cutting rates, this will do well. Let's look at a monthly chart. What's this thing yielding? Nearly 8%. It's an interesting chart. A lot of the damage has been done here. Before I entered this trade, I'd see where it's priced historically. Ooh, this is looking good. We broke out, at least on a daily time frame. We broke out on the 22nd. Now we're doing a retest. This is looking interesting. I would look at the PE ratio historically on AT&T. I'd see how it's priced on a relative basis going back, 5, 10 years. If it's discounted, I don't see any reason why you wouldn't want to buy this, especially if we believe, as we do, the Federal Reserve is going to have to, at some point in time, go back to the printing presses. What are people going to chase in a declining interest rate environment? Yield, 8%. And plus, you have upside potential in the equity price. So this is very attractive to me. So I like AT&T here. But again, it goes back to the valuation. I like the chart. We also need to check out valuation. As a matter of fact, you know what? We're here. Let's check out valuation. I don't have this historical. Jesus, Google, can you get any slower? P/E ratio of 6. I don't know how you get much cheaper than that. Return on equity, 15.3. It's in the mid-teens. Attractive. Earnings per share growth, their fundamentals are not good. They're losing money. But it's a cash cow. Could be a takeover candidate. All right, so I like AT&T here. Looking good. Just beware, we're going to be going into a sell-off here in the equity market, so T could go down as well, even though it's been beaten up. XLE will do that for Gay again, since I missed her earlier. Oil appears ready to move back up again. We had that bullish reversal bar on the day. So we know that energy trades with oil. If oil breaks out, energy breaks out as well. So energy, I would want to see how we close out oil on a weekly time frame this week or next. Do we break out? If we break out on oil, I'm a buyer of energy stocks. Right now, I would think about selling premium, selling puts on a company that you like, or sell premium on the XLE. And that'll give you a long exposure without having to buy the shares. If they don't get put to you, at least you're collecting premium and you're milking the cow. BBIO. Monthly chart. It's holding gains. I'm impressed by that. It's given some back, but you'd expect that. Critical support is 2684 on BBIO weekly view. And the reason why I say that, I didn't just pull that out of my hat. This is a volume shelf right here. The lower band of that volume shelf is where I came up with that number. Weekly view. We're pulling back to it. I think that's where we're going. I'd be a buyer there, or down here for an oversold trade at 2467. Daily view. You do have support below 27.78. Then again down here, I like it down with a 26 handle. So I'd be a buyer down there if you're so inclined. And the reason why I know exactly where these support levels are, folks, because I'm using TrendSpider, 35% discount code below. Click of a button, boom. There are your support levels. All right, what else do we have? Oh, AMD. AMD. Yeah, you got to avoid this. I don't even need to look at the weekly charts and monthly charts. Right now, we're breaking down. We have a couple of trading days left to go. Maybe we'll hold it. Weekly view. Again, we are at critical support. Now, here you only have one trading day to go before this is over. If we break down here, I think that we come down here to $95.87 per share. And we'll see if that holds. I wouldn't be a buyer right then and there. It depends upon the rate of change, the intensity of the selling on AMD. If it drifts down to that support level and consolidates there, fine, buy it. But you want to make sure it holds. You don't want to buy it simply because it touches, because the equity markets are under a lot of pressure now. Daily view. Yeah, so this is telling me, we have a support level immediately below. If I had to flip a nickel here, I just bit my tongue. If I had to flip a nickel here, I would say that it probably goes lower, but we do have support immediately below. So I think that what they're going to do tomorrow, and I meant to go to this earlier, is that, sure, Jody, we'll leave it off with Tesla. What I think they're going to do tomorrow, I'll show you the chart of Microsoft in a moment. Let's clear all this off. Okay. So here's the monthly view of Tesla. And I have a chart here. I want to show you something. I was going to put it on. I guess I didn't. I pulled this up earlier. Here. These are the used car prices. Average price for used Tesla dropping like a rock. So this is concerning to me. And you may be saying, wow, this is the spike from COVID. It's just giving that back now. Yeah, it's giving that back plus some, because now we've broken down below the COVID lows. So I think that has to do with their price cuts. And now you have more competition moving into the market. And these Chinese vehicles are going to come in and they're going to undercut Tesla. So back to the chart. So monthly chart, we're holding on to several support levels here. Not a horrible chart, but one that gives you the critical eye and saying, okay, what if things go awry here? If this closes down below 220 per share, it's all over. We're going a lot lower on Tesla. On the weekly view, we are still up on the week, but a lot of resistance immediately above. A lot of resistance. So would I be a buyer here? No way. Would I buy on a close above 241 per share? Possibly. Daily view. I have to say, I think this breaks lower. When you see a stock struggling for whatever time frame you're using, weekly chart, daily chart, 1 minute chart, whatever, if you see it struggling to try to break through multiple support levels, day after day, minute after minute, hour after hour, week after week, the greater the probability that it's going to fail. There's too much resistance up there. So they're going to need to drop this back and take another running start at it. So they're going to need to pull it back to a demand zone down here before they can take another run back up at that resistance level. I think this fails. I think it moves lower. So I would avoid Tesla. Now, where I'm thinking that the markets are going to go tomorrow is we'll use Meta. Now, Meta, we're short of Meta. and it broke down today. Good day for us. But what I think is going to happen, they're going to rally this, if not tomorrow, Monday, and they're going to try to recapture this prior support level at around, I don't know, 295, 290. Yeah, 295 sounds right. So they may do that. They may not do it. Right? It doesn't have to be, but I think that that's what they're going to do. And I think they're going to get monkey hammered on that rally back. If they try to rally it back up to that 295 point, I'm going to lean in short. And if they break it out, I'll stop out with a small loss. But if they drop it and it breaks down to new lower lows, golden ticket. Folks, thanks for being here. I really do appreciate it. I said it earlier. I really do appreciate your time here. I want everybody to really focus on the word I mentioned earlier, and that is liquidity. Are you liquid or are you leveraged up in the wrong direction? If you're leveraged up short, that's okay, but you don't want to be too overly short. You don't want to be too confident. I still have capital on the sidelines, and I'm looking to build more because I want, in case if I'm wrong and the market goes against me, I want that capital to be able to maneuver, shuck and jive. So if you don't have that capital available to you, you can't do much. And then all of a sudden you get that ring from your broker, and he's telling you, hey, you got to cough up more capital or I'm dumping your position. You never want that. You're not in control. The brokerage, when you're on margin, is your senior partner. Don't let them in the driver's seat. Never, ever let them in the driver's seat. They do not have your interests at heart. Look at your portfolios tonight. Think about the charts we talked about. Many of you are long of these positions or exposed to the indexes. Think about, do I need to lighten up? If the answer is yes, do it. Pull the trigger. You can always get back in. But once this thing gets going in the wrong direction, meaning yield curve steepens, the selling really good. If you thought 2022 was bad, you haven't been through a true bear market. That was not a really ruthless bear market. 2020 was. 2007, 2008 was. 2002 was. I traded all those. It can get a lot worse, and it can happen very, very quickly. So please be very careful out there. Thanks for being here. Everybody have an awesome night. Profitable trading day tomorrow, and have a great weekend. Be well.